I'm very pleased to be supporting this opportunity to tell more about angel investing for women. My name's Jenny Tooth. I really wear two hats. I'm Executive Chair of UK Business Angels Association, which is the trade body for angel investing for the UK. And I am also Vice President for Diversity for Business Angels Europe, which is the trade body for angel investing across Europe. A business angel is someone who actually invests their own money into early stage, generally high risk businesses, but that have huge potential for scale. You use your own money, but it will be your spare money, always your spare finance, money that you can afford to not see for a very long time, or maybe even for not to see it again. You need to be thinking about making your own decisions. So this is something that you're really interested in, that you really want to back, and that you find responds to your interests, your experience, and your knowledge. It's also important to remember that a business angel generally doesn't invest on their own, and I'll say a little bit more about that later, and that also it is risky, and that you can really learn how to do it to avoid all those risks. So that's really what a business angel is, and I hope you can also by that see the difference between a business angel and a venture capitalist who really is looking after investing on behalf of people who invested in a fund and taking care of that money, making decisions on behalf of the fund and the people who've invested in that fund. And this is really the difference: is you're investing on your own, but as a person with passion, with hopefully real interest and support for entrepreneurs. And in this case, we're talking especially about women entrepreneurs. And you asked also why they're important to the economy. Well, they are so important to the economy because really backing small businesses, backing entrepreneurs brings huge productivity, huge investment into small businesses to help them build, grow and scale. They will then employ people, they'll create wonderful jobs, they will create wonderful products and services, and all of that grows in the economy. And so this is really fundamental. And really, we need more people who will go into that very early stage and help entrepreneurs before they build, grow and scale, but to nurture them, take that risk, support them, invest in them, and indeed taking shares in that business so that you are part of that eventual growth and success story. If you really look at the overall landscape for investing, you'll mainly see the stats about equity investing overall, and that's really talking a lot about venture capital. So it's very hard overall for us to judge the whole size of the angel investment landscape in Europe. But what we do know is that because it's really been around for many, many years, it started out as a very, very male-dominated area where it was men who took most of the decisions about investing and formed themselves into angel networks and groups. And it wasn't really considered so much to be a woman's area. But we know that women are incredibly important in this area, and many more women are starting to invest and starting to recognize that opportunity to put their own spare finance, but also their skills and knowledge to work against women entrepreneurs especially. What we really know is that at the moment, not enough of those women have recognized that opportunity. Not enough of those women are really given the access and knowledge and education to be able to do so, or even finding other women angels. So we know at the moment that the population is only really probably between 14 and 20%. It varies across different countries, but if I take an incredibly developed country like the UK, there's still only 14 or 15% of women out of 37,000 angels, 5,000. And if you look at other countries in the developed markets, which began with men angels, it is the same. So we're an emerging and growing group, but such a really important group of women that we need to invest. And remembering that women put probably more than 30% of their investing behind women entrepreneurs, women who are leading and building businesses. And you can see how vital that is then for many other women entrepreneurs to have access to this level of investment. I think for women considering becoming angel investing, it's important to know that there is no specific skill set. There is no specific experience. You don't have to have a background in finance or maths or anything. It's really exploiting your knowledge and experience and passion for entrepreneurship. It's really helpful if you have yourself been part of business. You could have been an entrepreneur, you could have been part of a business, you could have been helping a business to grow or be part of a larger business. But you could also be a professional, you could have been a lawyer, doctor, accountant, but also just generally someone who is passionate about entrepreneurship, who can see the benefits in helping more women to invest, and who, more importantly, wants to use some of that skill set and experience to help nurture and build more women entrepreneurs. And those entrepreneurs will be from a wide range of industries and sectors and backgrounds themselves. And so there is no specific skill set. It is really needing to have that sense of perhaps adventure, risk-taking, wanting to support innovation, wanting to support women as entrepreneurs and follow that entrepreneurial journey and sharing that success. It's often a common myth, I think we have to have, we see people who are investing and it seems to be a full-time occupation. But for many women, I think it's a huge win-win situation because you can really take as much time as you want over this. I'll say a little bit more in a moment about investing in a syndicate and not on your own, but you absolutely do not need to spend huge amounts of time on this. Indeed, if you are in a group, you will have access to the deals, the opportunities and the support. But it's important to recognize that entrepreneurs actually don't want you to be spending time in their business. They want you to provide strategic advice, support, help, hands-on help when needed, but actually leave the entrepreneur to grow and build their own business. You're there to really add value. But I think it's very important to bear in mind that you can be as involved or as less involved as you want. And this can be totally outside your day job and alongside your day job. It's not needing to be a full-time occupation. So it's really great for women at all different stages in their career path. It is one of the most common myths that we think that to be an angel investor, you have to be rich, you have to be what we often call high net worth. In fact, actually, angel investing, particularly for women, is increasingly open to you to be starting at something like €2,000 to make an investment. But the main thing to bear in mind is that you need to be able to offer support along the way, so there could be further calls upon your investment. And you want to make a number of investments, ideally build yourself a portfolio of between 15 and 20 businesses. So that requires you putting some money into this perhaps 3 or 4 times a year, or even more quickly if you want to build that portfolio. But it's also important to bear in mind that this has to be your spare finance, not your pension, not your house, not things you have to pay for. This needs to be money that you can set aside and use it for that area of investing, and potentially not see it for a very long time until you get that successful outcome. Or indeed, it's perfectly common for very young businesses to fail and not return that money that you first put into it. So it has to be spare, but it doesn't need to be a lot, and you do not need to be wealthy at all. There is really quite a significant point to understand that, it does have a level of risk attached to it. You may or may not get, as I said, your money returned, but you can also make money out of this through actually quite strategic thinking about it. And you do that really by gaining experience and knowledge and working alongside others. It's incredibly important to bear in mind that anything can happen to a startup. So it's a wonderful journey they're on. It has huge ups and downs, and sometimes due to no cause of their own, market failure, the economy changes, things do not go so well. Part of the role we play is in helping to add value, support those investments, create opportunities for them to meet further investors as well, and also making sure that we are providing, the right support and help to them when it's needed. But you have to bear in mind that it is risky. The most important thing is to bear in mind that if you do actually follow a program of education and you work alongside others in a syndicate, I will say more about that in a moment, but it can massively mitigate your risks. It definitely de-risks you if you actually don't do this on your own. It's really important to understand the difference between investing on your own and in a syndicate. If you invest on your own, all the decisions are down to you. You have to find the deals. You then have to, support that investment, and very often you have to then add more to that investment. And obviously, the whole responsibility is yours, and that takes a lot of time. It takes obviously more finance than perhaps you would plan, and also you have, perhaps more challenges and more risks doing that. If you invest in a syndicate, you invest alongside a group of other angels. Many of those angels may have been investing for some time and have a huge amount of experience and knowledge to share. But also, importantly, it means that you can actually spend time sharing your knowledge, sharing your skills, looking for deals between you, but also having a pool of opportunities and deals that you can share. It means that you share the decision making, and most importantly, you're pooling the risk by pooling your investments. Yes, I think it's another big sort of area of, thinking that it's a very complicated process. In many ways, it just has a number of steps that it's good to know about. First of all, obviously, you are looking for good opportunities, and it's important to have access to quite a pool of those opportunities, which is why it's really good to work in a syndicate or in an angel group that allows you access to a wide range of opportunities. But you may find those in all kinds of areas, in accelerators, in incubators. You may find them in your own line of work. If, say, you're a lawyer, accountant, or anyone who's involved with working with other businesses. And you may even find them if you're a doctor, a scientist, or any of those areas. But really, you want a pool of those opportunities. And then the next, of course, is the question of how you evaluate and how you understand the right businesses to back. And that's really where education comes in. But there are key areas you will want to be looking at, everything from the individual, their own experience, their own passion, their own abilities, and the team they're building around them. Also, whether it's a market opportunity, and also whether that market opportunity is big enough or accessible to them. And then also looking at things like, do they have the potential to scale and grow? And where do you think money can help them? And those are some of the key areas. But actually, through a program of education, you will learn more about that, and just working with other angels. The next big phase, of course, is often that you get a chance to see a pitch. And that's a great opportunity as an angel to see real live entrepreneurs presenting their business opportunities to you and allowing you then to draw on that insight and knowledge, and often your own gut instincts as well. Asking them questions, being diligent. You can ask as many questions as you like and ask to see more information. And that's really where that process of getting together and doing more deeper investigation, more due diligence. But again, it doesn't have to all be you. You will share those skills and knowledge with others. And then there's a decision-making process. Is this the right business? Does it tick the right boxes for you? Do you feel it's the kind of business you could work with, that you could support, and that you have belief that ultimately that will scale and that will bring success? So, those are the key processes. But it's also worth remembering that this is a legal process. You are not exposed, just a decision making between you. You have a legal contractual relationship to that business that you've backed. You will not or should not part with your money without actually going through real legal processes. There's everything from, documentation. You have to have, a shareholders agreement. You agree how much money you're investing. You agree about reporting. You agree about contact. And also you have this very in-depth knowledge and evidence process that you can draw together, and that is all put together within the legal documentation before you would even part with your money. And then there's all the fun and excitement of supporting that business post-investment. For an angel, you have to bear in mind that there are no magic bullets. You don't suddenly go from making an investment to success. Very, very occasionally that can happen, and people have, wonderful success where a company comes along and buys that business, within a short amount of time, and it's wonderful. But the more typical situation is that the business has to go through quite a number of growth stages before they would achieve success. That may mean some more levels of investment from you and from your angel group, but also then going on potentially to need more venture capital investing and a number of rounds of that, and then going through stages through to further growth, and maybe it could be several years. The normal time for having an investment involved can be 12 years now, from the start off as an angel right through to having a successful exit. You can be fortunate, and sometimes you can have an exit along the way when venture capital comes in, or you have sometimes a partial exit when the company wants to sell some of their shares. But you have to be prepared to be patient capital. This is capital which is tied up, supporting an early stage business right through its growth stages. And all the results have shown that often the longer time to exit, where the business can really build and grow, means that actually that's the greatest success. But failures can happen along the way, and that's something that you really have to bear in mind. So this is why you have a portfolio. You build and you make a number of investments. They'll all be at different stages. Some of them may well come to fruition, whilst others will still be tied up. And you also have to bear in mind that there will only be one or two amazing exits, very many smaller ones, many that only just tick along, and others that will fail. And that's what you build in through portfolio investing, and having a view that this is patient capital, but one that can bring great rewards if everything goes well. It's a very interesting area for angel investing, because over time, the European Commission has been very supportive of this space, as have several national governments, especially in the more developed markets. But it is worth bearing in mind that we are private investors, and therefore there is a limit to what public support will give. The most fundamental and probably the most compelling opportunity is tax reliefs. And the UK was leading on this and have been doing this for over 30 years, giving tax reliefs to angels that actually mitigates against both the risks, but also reduces their exposure in terms of the amount of money they're committing. So in the UK, you have between 30 and 50% tax reliefs through the Enterprise Investment Scheme and Seed Enterprise Investment Scheme. But there are many other countries around Europe in the developed markets that have seen the opportunity to give tax reliefs. So you can find in probably about 8 other countries around Europe now tax reliefs. Another very important area that has been supported also by the European Commission and also by national governments is co-investment funds. Now, co-investment funds are really not there to directly relieve your investing or your exposure, but what they do, they turbocharge your investments, often providing matching funding to the amount that angels invest, some cases more, some cases less, and some of it the leverage does vary. But what it does, it really adds value to that investment and enables that company to go faster, quicker, and hopefully grow faster. So that's another very, very important area of opportunity. The European Commission has had various funds themselves, but I think the biggest area we have to bear in mind, where public money most supportive, is also through accelerator and incubator programs, because when you can support the entrepreneurs and give them a boost, particularly adding value to their research and development opportunities, helping them to commercialize more effectively their innovations, and giving them that early support, generally in terms of grants and loans. This can offer really important undiluted co-investment alongside angel money. And this has been one of the most effective areas. And we can provide a lot more information about that, of course. It's really important to know that, angel investing is a lot of kind of learning on the job, but it's really, really important, if you can, to go through a proper developed program of education. I think as a woman, it's really important. We often want to really look under the bonnet and really understand things better before we do them. And there are some great investment programs now that really help women to learn how to become an effective angel investor. We will be developing a big resource base of those, but they are certainly happening more or less all around Europe. And you will see some that are centrally supported by the European Commission, and many are run at national and local level. Lots of angel groups around Europe are providing their own. So I would always say, do go through a program of education and support. There are now quite a lot that are dedicated especially to women as well. But also it's a great way to give you the confidence to make sure you do invest, take those steps, and know how to do it effectively and well. We cannot ensure the success, but we can ensure that we understand it better, we know how to do it and make the right decisions. I think getting your skin in the game is a very important one, and making sure that you really understand this topic. It is the biggest way you can mitigate your risks, to be honest, to really know what you're doing and how to do it well. But doing it alongside others is also the great advantage to this, so that you're only risking small amounts of your money, you're sharing those decisions as well, and then pooling your capital and your knowledge. So I would always advise that. But in terms of Women Invest EU, we will provide a huge raft of resources and access to knowledge about training schemes, as well as direct access to training materials and resources and links that you will be able to find through our website. But I think most importantly, do join an angel program, because that's also how you'll meet many more new and experienced investors, especially also many great women and success stories.